blockchain, cryptocurrency, decentralized finance, central bank digital currencies, and the future of money. So I'm going to be talking about in this course blockchain, decentralized finance and NFTs, central bank digital currencies, and cryptocurrency and the different cryptocurrencies. So just a bit of a disclaimer here. A lot of this content works at the intersection between computer science, cryptography, finance, and economics. I'm not a computer scientist, and I'm not a cryptographer, but I am an expert in finance and economics. So I might be a bit light on the computer science parts and the cryptography parts, but I can talk a lot to the finance and economics of these technologies. So computer scientists, please, if you see anything that isn't quite accurate, or you see anything that you'd like to sort of me to edit in this video, I'm more than happy to do it. I'm not claiming to be an expert in cryptography or computer science, but I think you have my assurances that the finance and the economics parts will be right. But obviously a lot of these topics sit in a complex intersection between those four disciplines. What this course is not. It's not a course on how to day trade crypto. So all of those people to tell you that get into crypto, that you'll be a billionaire in 1 week. If you want to be the next Aliko Dangote, then just start trading crypto and you can get there in 1 month. This is not one of those courses. Number two, it's not a how to make money from crypto course. So I'm not going to teach you, I see all kinds of weird tutorials on, I'm going to teach you how to be a billionaire from crypto. I'm going to teach you how to buy your first house from crypto. It's not that kind of lecture either. It's an academic lecture. And definitely, if you're the type of person that is thinking, after listening to this lecture, by next week, you can be posting the car or the Lamborghini that you bought from crypto on Instagram. If your aim is to really, floss for your friends on Instagram and show them your new car, this probably isn't the lecture for you. There are people that specialize in that area, and I'm not one of them. In fact, I'm neither a Bitcoin maximalist or minimalist. So I'm not, you see some people on the internet treat it almost like it's a religion. I'm definitely not a maximalist, but I don't believe it's nothing. I don't believe it's a fluke either. I'm kind of in the middle. I feel a bit quite neutral about the future of Bitcoin. It might be the future of money. It might be, the biggest revolution to the finance industry that we know. It might be a kind of slow burn thing that people eventually get over. Who knows? Like I said, even Dr. Strange could not tell the future. But what I'm going to be talking about is what's happening now and what may happen in the future. So what is blockchain? Blockchain is a chain of blocks that documents information designed to originally, like I said, timestamp documents so that they can't be changed. And it wasn't until 2009 when it was used to create a digital currency. So the way I see it is that blockchain is a technology, just like PowerPoint. And I used PowerPoint to put together this presentation. But blockchain is a technology. And I've chosen to use PowerPoint to give this presentation. But you can use PowerPoint for a lot of other things as well. There's a lady called Nancy Duarte that teaches on presentations, and she wrote an entire book using PowerPoint. So she actually used PowerPoint technology to actually write her book. And then there's a lot of people that do these Instagram posts with motivational quotes. Especially the people that specialize in, I don't know if you see them on Twitter, they're mostly on Instagram, where they, write, "The scars made me who I am." And again, they use PowerPoint to make those their motivational flyers. So they use PowerPoint to design the flyer, then they convert it to JPEG, and then they post it on Instagram. Hard work will get you anywhere. So what I'm saying is, the underlying technology can actually help you do a lot of things. And the same as blockchain. Blockchain technology can be used to make smart contracts. It can also be the underlying technology that you use for digital currency, and that's what Satoshi Nakamoto used it for. But the difference between PowerPoint and blockchain technology is that even if I made a PowerPoint presentation 10 years ago, and you know, I don't like it anymore, I can go back into the PowerPoint and I can change whatever is on the PowerPoint. I can change it totally. I can change it, everything about it, and rehash the whole presentation to make it a different presentation. And if I hadn't sent it to anybody, nobody would really know. The blockchain is different. So once it's on the blockchain, it's on the blockchain forever. It cannot be changed. You cannot change the time. You cannot change the data. Very, very difficult, and I'll be explaining why. So, like I said, blockchain is a chain of blocks that contains information that was originally designed to timestamp information. And I'll be talking more about blockchains as we go on through this presentation, but right now, just view them as digital blocks that contain information which is extremely difficult to change, particularly the time stamp. The time that is done is the time. And when we talk about, when I first posted back in 2017 on Twitter about blockchain elections, I think the reason why it generated so much excitement is because it cannot be changed. And I know that, well, maybe America, I don't know, but anyway, the UK and Europe, you know, it might be a less natural thing to think about why would you change an election result in the first place. In Africa, I can tell you that there's a use case for wanting to timestamp the time of people's votes in a way that it can't be changed. And I won't say more than that. But, you know, there's a lot of use cases for this technology. So terms to understand before we dive in. What's a hash? What's a node? What does consensus mean in the context of cryptocurrency? What's proof of work? What's proof of stake? So like I did in the earlier lectures, I really like to define things before we go into the body of the lecture, because that helps everybody get familiar with the terms. So when I'm using them, and I'm using them very, very quickly in conversations, it's easy for people to catch on. So the first definition is a hash. What's a hash? A hash is like a fingerprint. An immutable, that means undeletable, cryptographic signature, and these are recorded on the blockchain. So it's the cryptographic signature with which transactions are recorded on the blockchain. What's a node? A node is a computer connected to other computers, which follows rules and shares information. So I could be a node, you could be a node, anybody could be a node. But what a node means is it's connected to the Bitcoin, it's connected to the network, Bitcoin's network. And it means that when a transaction is done, then everybody gets a copy of that transaction. And that is it. That's why it can't be changed. Even if you want to fly around the world, there are people's computers connected around the world. So some may be in Delta State, some may be in Uganda, some may be in Kenya, some will be in Ethiopia, some will even be in Sudan. So for you to be able to change everybody, the information on all these people's computers, and I've only used African examples, but really there are hundreds around the world, in villages that you can't even get to, in towns that are very different. You can't change it because the nodes all communicate and they all have the same information, and that's why it's difficult to change, because people will notice that you've tried to change it. Consensus as it relates to blockchain. So consensus is, the consensus algorithm is a mechanism that uses, that allows users or machines to coordinate in distributed settings. So that's a consensus algorithm, and this was a wonderful thing about Bitcoin. They allowed all the users to communicate in a distributed setting, and I'll be talking about the Byzantine generals, using an African example later. But this is really, I mean, you can watch whole lectures just about this consensus, because consensus is the core of what makes this technology work, because it needs to ensure that all agents in the system can agree on a single source of the truth. Okay, Byzantine generals problem. So before I go into the Byzantine generals problem, I would give an example of if this thing happened in Nigeria. So let's say it was 100 years ago in Nigeria, and the Yoruba and Igbo and Hausa and South people got together and said, you know what, we're tired of being colonized. the white people are all in Lagos. We're going to attack and we're going to drive them out. That would mean that each tribe would have to surround Lagos. So let's say the Yoruba people came from Lagos-Ibadan Expressway and they now gathered around just outside Lagos, just around that the end of Lagos-Ibadan Expressway, just getting into Omole area, right, in Lagos. And then let's say the Hausa people came via Ikorodu into Lagos. And then let's say the South people, not to be stereotypical, you know, you people are my people, but just for the sake of the story, came through the lagoon and they were in boats. And let's say, who haven't I mentioned? Igbo people. Igbo people decided to come through Ekpe and they were all waiting at midnight. Remember, there were no mobile phones, it's 100 years ago. And they were all waiting at midnight to attack these people and drive them out of our country. How do they communicate? No phone, no WhatsApp, no email. They have to send somebody. So that means that the Yoruba people at Lagos-Ibadan Expressway need to send somebody to the people at the lagoon, because if they don't attack all at the same time, then the attack is going to fail. That means that the Hausa people, I don't know where they are located now, I think they were coming from Ikorodu side into Lagos. They also have to send a messenger. Remember that the South people have no idea how the messenger coming from the Hausa person will look. Now, they have no idea if the messengers can even be infiltrated. Well, one of those white people will say, okay, let's change the messenger and give a different message. Because what will happen if one group comes into Lagos without the support of all the other groups, then they'll definitely die. It could even get worse. What if one of the generals has already concluded or colluded with the colonial masters and said, you know, for a few mirrors, I can deal with these people, and I'll just give these people false information and they'll come in and you'll kill them all. This is the problem, the Byzantine generals problem. So this problem was actually conceived in 1982. But obviously, it wasn't with Nigerians. I just used Nigerians for an example because I like to use Nigerians for everything. But this was actually the Byzantine generals problem, and people have been working on it since 1982. And it's the same kind of dilemma. How do a group of Byzantine generals agree on what their next move should be when they have to use messengers to communicate and they don't completely trust each other? So how can they get messages to each other without some of the messages getting delayed, destroyed, or lost? And that is the same thing with these cryptocurrency transactions on the blockchain. How do we do a transaction? Because remember, when we do transactions, it's not Tolu that keeps a record of those transactions. It's not Emeka that keeps a record of the transactions. The reason why I know that a transaction has been done is because Zenith Bank is keeping a record of that transaction. And Zenith Bank can even go funny. If it wasn't monitored, can you imagine if there was no central bank? Then all the banks will go funny. It's the government, the central bank, that actually makes sure. Like, people don't actually realize how this thing works. And there's another video on my YouTube, which is on banking supervision and regulation. So you can see that actually, we only trust in the banks because of the government. In fact, do you know how many times the government is sending supervisors to the bank to make sure that the bank is not cheating anybody? So the reason why we escape that problem is because there's a central authority that keeps those players in line. But in the case of Bitcoin, we're now saying that we don't want any central authority, that we just want to be doing it by ourselves. So who is going to keep the record? Everybody has to have the record. And that's the problem that Satoshi Nakamoto realized he had to find a solution to when he was creating Bitcoin. That those transactions have to show up on everybody's computers. Otherwise, who's going to, we can't trust anybody. We don't even trust our banks without the government backing. So there needs to be a way that we can solve this problem of consensus. So another definition is the Genesis block. The Genesis block is a name given to the first block in a cryptocurrency. So the first Bitcoin ever mined was the Bitcoin Genesis block, and all the other ones have Genesis block. And because it's called the Genesis block, I just put a picture of Adam and Eve in the Garden of Eden. And then proof of work. What's proof of work? A proof of work algorithm is the algorithm that secures cryptocurrencies, and most of the top sort of, I guess, maybe even 5 cryptocurrencies all are secured by proof of work algorithms. So proof of work is it solves the double spending problem to make sure that one unit of the currency cannot be spent twice. And that's how you bring out the next Bitcoin. So each Bitcoin that is created through somebody solving a proof of work puzzle. So how you actually get the number of Bitcoins is growing every single day. And it's because this doesn't happen in Nigeria because we don't have the power, but because people have factories with computers, probably like 100 or 200 computers, all working on solving one particular proof of work puzzle. And the power that it takes to do that, Nigeria actually does not produce. That's why we don't produce Bitcoin. But that is called the proof of work. So blocks are actually made by the miners, usually in China, in Russia, in places where, what will I say, electricity is reasonably priced. If you try it in Nigeria, you just shut down the whole of Lagos State, because you need a lot of computing power to be able to solve these proof of work puzzles. And before, it gets harder and harder. As the chain develops, it actually gets harder and harder to solve these proof of work puzzles. So now, even people rent whole factories, like Dangote size factories, Indomie noodle size factories, and they have rows of computers all solving this, because each Bitcoin is now $60,000. And if you live in a country where, you know, you can talk to the authorities or you can talk to the people supplying electricity, just give them wherever you can towards whatever they do, you know, and you can have an arrangement between you, then you can actually produce each Bitcoin at a very, very low price. But, you know, it's a very high energy procedure to produce each Bitcoin. And the reason why is because each one that is produced, nodes around the world have to be able to confirm that this is the person that solved that puzzle. And even now, it's gotten to the stage where there are networks of these factories that all have clubbed together and say, okay, if you are the one that solves, then we split the money between us. If you are the one, everybody in this network, whoever solves will split the money. So that's how they manage their arrangements with solving the proof of work algorithms and bringing out each new Bitcoin. And some people say that the amount of energy that it takes every year to produce, that is used in producing Bitcoin, is like a small European country, basically. It's a huge amount of electricity. So some people argue that Bitcoin isn't very environmentally friendly because of the amount of power that it uses. But then some people will also argue that when you go to every bank, in this Nigeria, every bank branch has a gem. And then when you think of all the bank branches in Africa, when you think of all the bank branches around the world, all consume power. Is it not less electricity used in producing Bitcoin than it is powering all the banks all around the world in the traditional banking system? So that's the argument that Bitcoin maximalists will make when they say it uses too much electricity. But there is an alternative, and it's called proof of stake. So proof of stake is actually a mechanism that uses randomly selected validators to validate each block, rather than then having to solve any puzzle. And what you have to do is, if you want to be one of the people that has a chance of getting this block, then you have to put your own cryptocurrency as a stake And if you try and cheat them, you cannot collect it back. So that's proof of stake. And proof of stake uses, so the difference between proof of work and proof of stake is proof of stake uses randomly selected miners to validate transactions, whereas proof of work uses a competitive method to confirm transactions and add new blocks to the blockchain. What are gas fees? Obviously, we're not talking about PMS or petrol. Gas fees refer to the amount of Ethereum required to interact with the user in the in the network. And when you're buying NFTs, for instance, you pay gas fees. So those gas fees are used to compensate Ethereum miners for the energy used to verify a transaction. What's a 51% attack? I'm sure everybody has thought about it. What if one person is able to dominate so much of the network, or so many computers in the network, that they themselves can start controlling it? So this is known as a 51% attack, also known as a majority attack. This is when a single person or group of people gains control over 50% of the hashing power. Remember, I told you about hashes. Each unit is a hash, or each, it's a digital fingerprint of the data. So when you control over 50% of blockchain's hashing power, then it's known as a 51% attack. And this is usually achieved by renting mining hash power from a third party. So people ask that question as to, look, this thing is fundamentally unstable. What if people are able to form a cartel? And if you look on YouTube, I have a lecture in my microeconomics series about cartel formation and what you need to form a cartel. But I believe that this is a kind of product where human beings sort of would want to form a cartel. So obviously, as the network grows, it's much harder to control 51% because more and more countries, more and more towns, more and more people that you have to communicate with. But it's still something theoretically that could happen. Back to a blockchain. What is a blockchain? I just want to remind you, it's a chain of blocks that compose, we discussed it so much earlier that I think you might have forgotten by now. It's a chain of blocks that contains information designed originally to timestamp documents so that they cannot be changed. So we're going to go into how a blockchain visually, you can visualize it in your mind. So each block in this diagram contains the data, the hash, the fingerprint of the block, and then the hash of the previous block. So this is how they link together. So you have the data of whatever you've done, whether a transaction, whether something else, then it has the hash of that block and the hash of the previous block, and this is how they all link together, and that's why it's a blockchain. And then security beyond the hash, we've spoken about this. We've spoken about the Genesis block, we've spoken about the proof of work, and we've spoken about the fact that it's a distributed network and everybody has a copy. We've been hearing about decentralized finance, and that's the next thing I wanted to talk about. What is DeFi? And DeFi is an umbrella term for financial services on public blockchains, such as Ethereum. So the term decentralized finance, or DeFi, it refers to the ecosystem of finance that is on the blockchain. Obviously, Zenith Bank and UBA and Fidelity are in front of us. They're not on the blockchain. They are in the traditional banking system. Decentralized finance, and they are and Fidelity Bank is overseen by CBN. So it's centralized finance. Somebody is looking at everything that they are doing. CBN have hundreds of supervisors that they send to the head office to inspect every transaction. And if they see anything that is illegal, they fine them immediately. In the decentralized finance world, there is no CBN. So this refers to financial services that you do on the blockchain, where the program itself and the method of distribution and the process is the CBN. And you can do most of the things that banks support: earn interest, borrow, lend, trade derivatives, but it doesn't require the processes, the KYC, all of these things that you'd have with a typical bank. And it's usually peer-to-peer. So why is DeFi important? I think with the original Bitcoin was a digital currency, and that was a breakthrough in itself. But what DeFi does is takes the basic premise of Bitcoin and expands on it, creating an entire alternative to what we have on ground in Nigeria today, but without the offices and the trading floors and the salaries and all of these things. So what people say is that it has the potential to create a more open, free, and fair financial market. I'm not 100% sure about that. This is what Coinbase says, and of course Coinbase are a crypto exchange, so what are they supposed to say? But I'm just telling you the premise. But what I want you to go away with from this lecture is not wholeheartedly believing that it's going to create a different financial system, or it's the future of money, or everybody that invests in Bitcoin are going to become billionaires. I don't want you to go away thinking that. What I want you to do is be able to think logically and critically for yourself with the information that I've given you as to what you think personally about this new type of finance. So I'm going to talk about NFTs. Very interesting. So I've been interested in NFTs from, a sort of intellectual perspective. But I think it was a few months ago, somebody called me and was like, oh, do you want a which NFT? H-I-C-H, like which, like why? Or is it which, like Aje? Aje means in Yoruba, in Nigerian, it's a Nigerian language, it means like the evil kind of witch. She said it's the evil kind of witch, like Aje, that I can become a witch in the metaverse, and I can choose what powers that I want to have, that I won't be a witch in this life, that I'll be a witch in the metaverse. And I buy, as soon as I own the NFT, which I've told you before is on the blockchain, so it's time-stamped, that I can really be a witch. And I said I'm not even interested in being a witch in this life. Well, at least I can do some damage to people that have been horrible to me. I don't have any enemies in the metaverse. But why would I want a witch? Well, the most amazing thing is that she was charging about $9,000 for this witch picture, where I can be a witch in another, not in this life, in another life inside the metaverse. And NFT prices are pretty crazy. The original, the Ape Yacht Club, those ape pictures, I mean, people are buying them for hundreds of thousands of dollars, if not millions of dollars. And I can remember watching a video, somebody sent it to me on WhatsApp, where somebody had one of those ape NFTs, which is essentially just a picture, digital art. And he had it on his phone, and he went into a conference, and there was like a huge crowd around him, like, wow, you're the owner of one of these ape NFTs. I was so surprised. Not a physical ape, because you know there are these gorillas in Cross River, there are some animals that we have there, not an ape, a picture of a cartoon ape. But it's nothing to laugh about, because there's money there right now. NFTs transform digital works of art and other collectibles into one-of-a-kind, verifiable assets that are easy to trade on the blockchain. So, like I said, it might be very difficult for people that have not been initiated to understand, but honestly, people have made serious money. So Jack Dorsey's first ever tweet on Twitter sold a NFT of Jack Dorsey's first tweet, sold for almost $3 million. With my brief calculation, that's over 1 billion naira. That's land in Banana Island. For a picture that was minted as an NFT of Jack Dorsey's first tweet. But you can still go to Jack Dorsey's first tweet on Twitter and screenshot it and have the picture on your phone. But because it was minted into an NFT, and that is unique and time-stamped, that was what brought the value. So we'll be looking at other cryptocurrency assets that can be bought or sold. So Bitcoin is not like an NFT. You're not the sole owner. You can give it away. Like, they can be replaced or exchanged. You can have an identical one. But NFTs, you cannot have an identical one. So no two NFTs are the same. So before we go on to cryptocurrency, I want to talk about one more thing. Remember, we've been on a long journey, and I just don't want to lose anybody. So we've defined Bitcoin. We know what a hash is. We know what NFTs are now, hopefully, and I hope I didn't fumble the explanation at the end of the NFT explanation. Like I said, I'm not a computer scientist, so I can explain it from the economics and the finance point of view. And we've spoken briefly about cryptocurrencies. We've spoken about the Byzantine general's problem. We've spoken about the 51% attack. And now I'm going to briefly talk about central bank digital currencies, because this is really important for Nigeria before I go on to crypto. So central bank digital currencies are a form of digital money, but they are denominated in the national unit of account. So it's the direct liability of central bank. And I was quite proud last year, actually, when we launched one of the world's first global digital currencies, central bank digital currencies. And these can be used they can be used wholesale, they can be used retail. So they can be used by businesses, they can be used in retail institutions as well, by financial institutions, and they can be used in retail. And they can either be on the blockchain or they can use other technology. So they're not necessarily based on blockchain. But I think, if I'm not mistaken, the e-Naira is actually based on the blockchain, but not all of the central bank currencies have to be the use of blockchain technology. And this is our central bank governor and the president launching one of the first central bank currencies in the world. And at the last MPC meeting, the central bank governor said that it had been downloaded 1 million times, which is quite small, but I think it has huge potential. And I'll tell you why. In a place like my state, where I'm from in Nigeria, Ekiti State, if they start paying federal government allocation, Nigeria is not the most productive country. So it's a country that generally relies, it gets all revenues, they go to the city in the middle, which is Abuja, and then the money is shared. So if that money, the government starts to say, look, we're not going to share it in real money anymore, we're going to share it in e-Naira. That e-Naira now goes into the states. They now start paying civil servants in e-Naira. In some states, civil servant salaries are the only real source of money, the only real economy. So if all civil servants have is e-Naira, then the market woman has to start taking e-Naira. The people in the supermarket need to start taking e-Naira. If the most economically powerful block of people in most states in Nigeria only are receiving their salaries in e-Naira, then everybody has to start taking e-Naira. And what happens then? Number one, there's lots of people without bank accounts in Nigeria who aren't financially included, who can't take loans because they don't even have an account. Immediately, that starts including the informal sector into the financial system. Number two, we know what everybody's earning. So last year in Nigeria, the GDP, that's all the money in Nigeria, all the transactions that go on in Nigeria, so the GDP to tax ratio in Nigeria was 6%. So Nigerians pay 6% of all the money that is made or earned or exchanged in Nigeria as tax. Sounds a lot of money. Before you realize that Afghanistan, that was at war, that there was Taliban, paid 9% of their GDP in tax. And in the UK and Europe, it can be as high as 35% of GDP as tax. So part of the reason why the government doesn't have money to do roads and hospitals and all of the things that they're supposed to be doing is because actually Nigerians don't pay tax. But can you imagine if it's e-Naira? There's no way to hide. When the major source of money that is coming out of the federal government is coming out electronically. So it should, theoretically, also improve our tax revenues, which will improve all of our lives because the government will be able to do more stuff. Cash is also very, very useful for corruption. if you want to do a corrupt transaction, then you don't want to do it on a blockchain where everybody will see. You want to do it in secret. Hide the cash, right? Cash is actually fantastic for money laundering. E-Naira is possibly the worst thing that you could use to steal because it can easily be traced to you. So E-Naira also would help potentially, theoretically, reduce corruption. And finally, what central bank tries to do to control the economy is called monetary policy. And when there's like really high inflation and the economy is overheating, they try and like rein that in, right? And they try and stop the banks lending, keep all the banks' money in the central bank, so people have less money, they're not spending it anyhow, and the prices of stuff stops going up. And then when there's a recession, they try and like push money out into the economy and try and get people spending. And that's the way they really control the economy. That's a lot easier to do, right, if everybody is financially included. And the last thing is, like I said in my earlier lectures, there are 90 million poor people in Nigeria, more poor people than any country has in the world. Now, at the beginning of the COVID pandemic, the government decided that they were going to try and help all those poor people by giving them food. My people, we know what happened. Somewhere in the process of trying to get the food to the people, the food disappeared or was stolen or was looted or was kept. Sure, the food didn't get to the people that it was meant to get to. So with the e-Naira, you don't need to give anybody food. You can actually just directly from CBN transfer to the exact wallet of the poor people that you want to transfer to. Because the problem was, why we were giving out food is because the poor people don't have bank accounts. And cash would have been worse. If we're giving somebody cash to give to somebody, to give to somebody, to give to somebody, the cash would have never reached in the first place. So that's why they decided to give food, because at least food is harder to steal. But they learned that food is not harder to steal. But with the e-Naira, that could solve a lot of problems. So I've spoken about some of the problems that central bank currencies can solve in countries like Nigeria and in developing countries across the world. And I'm just going to explain a little further. It's like I said, it's a digital form of the national unit of account. So it's not a crypto. One e-Naira is one real Naira. And so it's traditional money, but in digital form. It's issued by the central bank. It's influenced by monetary policy, like I said. And it's based on a digital ledger. And I'll be speaking about ledgers a bit more in subsequent in a few more slides, where it's a digital ledger which may or may not use blockchain. What central bank currency is not? It's not crypto. It's not entirely determined by the market. So the price of Bitcoin goes up, it goes down, and it's determined by the market. This is not like that. It's your Naira. And it's not like a digital electronic cash. So what you transfer in your app is electronic cash with a claim against the bank. It's not like that. So central bank digital currencies, according to an Economist article I read, and I think even in the Bank of International Settlements as well, over 80% of central banks are thinking about producing some form of digital currencies. Nigeria just took the lead in that area. But it's rapidly evolving. There's several approaches to how people are thinking about it. And you know, some of the things that people are thinking about are, do we just completely replace notes and coins? Don't forget that every commercial bank in this country has to pay money when money gets too old. They have to pay money to central bank to destroy it for them. So it's just an expensive way. Why can't we just be spending e-cash? But also people worry about privacy. You know, the boys on the streets of Lagos, as I'm sending money to my girlfriend now, is it that central bank will know, or how do we do? Like, people are worried about anonymity and privacy. Like, every transaction, no transaction can be secret. And people are just like, is my whole life going to be out there now? Like, at least if I want to give somebody cash, I can give the person cash. And it's not as if the person is committing a crime. No. They just don't want every transaction that they have to be recorded. And then things like access and interest-bearing ability are also things that central banks are thinking about. So now we've spoken about central bank digital currencies. I'm now going to speak about what you've all been waiting for, cryptocurrencies. But before I speak about cryptocurrencies, I'll speak about how they evolved. So like I said, cryptocurrencies are actually operating in the intersection of cryptography, finance, and economics. And they actually had some roots in Africa. So two ways that link the original cryptocurrency, which was Bitcoin, to Africa. And number one was the Biafra War. Now, one of the unfortunate things about Nigeria is that we don't teach history in schools, so nobody really knows what happened before, in Nigeria. But apparently during the Biafra War, there were, a group of ciphers, who I'll talk about later, who used cryptography to communicate. And then there's also a link to Kenya, which I'll speak about as well. And even preceding the cryptocurrency that worked, which is Bitcoin, there was a whole graveyard. I mentioned eCash. There were some other types, even some of the ideas around PayPal that didn't quite work. A lot of people had tried to make these virtual currencies. We've been talking about the Byzantine generals problem since 1982. So a lot of the things that Satoshi Nakamoto built on were some of the failed experiments, reasons why certain things didn't work over time to get us to this stage. So yeah, cryptocurrency and the Biafra War in Nigeria. So cryptography is actually a way to communicate with without untrusted parties having access to that information. And during the Civil War in Nigeria, Biafrans communicated with Portugal via cryptography. And the interesting thing, right, is that hardly anybody in Nigeria even speaks about this because Nigerians don't know any history. But if you read, I was reading like some Norwegian blogs and some British and American cryptography blogs, and they were like still trying to translate and decode those original Biafra messages just as a hobby. And they had actually decoded some of them, and some of them were actually too difficult for them to decode. So everybody, like there's a whole movement online that talks about these Biafran ciphers and how they were able to build these codes. And I think it's a Norwegian or Finnish guy that was speaking about how sophisticated the Igbo people must have been at that time to have that kind of cryptography ability to show that some of those codes, some of that cryptography, still people are struggling with it today. And that was how they were communicating in codes during the war, so that their untrusted parties would not have access to the information that they were passing across. And I really think that there should be a Nollywood movie made about this because it's fascinating. And there has been a Hollywood movie made about a famous cryptographer, Alan Turing, who was able to decode some of the messages that the Germans were sending, Nazi Germany was sending. And the movie is called The Imitation Game, if you want to watch it. And it was about the process of decoding and sort of hacking into those messages. And it was part of, this art, this sort of activity contributed, of course, to saving a lot of lives during the war. M-Pesa in Kenya also predated Bitcoin, and that was like a major breakthrough on the road to cryptocurrency and electronic actual digital cash. And what I mean by electronic money is money that you can send to somebody without telling anybody else. Tolu, can I send money to you without Zenith Bank knowing about it? Electronically. But what electronic money has done is you can now send money to somebody without anybody else being involved, except you and the person that you want to send money to. No central authority. In fact, if I want to send some money to somebody in the UK, go and look at those SWIFTs. It goes to New York and then goes to England, because every Nigerian bank has a correspondent bank where all forex transactions are sent to before it goes to the person. So cryptocurrency actually eliminates the need for all that. But sorry, I've digressed. We're talking about M-Pesa. But M-Pesa was key to the breakthrough in electronic money, and it was definitely predated Bitcoin. When Safaricom realized that customers were trading in airtime and created a way that people could send money through their mobile phones. So this was definitely a key step in the evolution leading up to Bitcoin. And I just wanted to say, it's not as if, you know, Africans were completely sleeping when all these things were going on. We still had our own innovations and own contributions to what eventually became Bitcoin. And I wanted to highlight those because I think it's important for young people to understand the role of African innovation in the development of these technologies as well. And even if it was one dot that we contributed, I'm just saying that we did something. So yeah. So the last slide before I actually talk about Bitcoin is to talk about ledgers, because that's what Bitcoin is, a credit and debit ledger where every transaction or every debit transaction has a corresponding credit, like a spreadsheet. And ledgers were actually the foundation of modern capitalism. Long before we developed software and computers, we worked with ledgers. And anybody that has taken ICANN is a Nigerian version of ACCA, will know about ledgers and double entry bookkeeping. And I've actually put a picture of one of the most famous accountants in Nigeria on this slide, Mr. Akintola Williams. You know, the audience, I can see the accountant's very active, and he's like the godfather of accounting. He was so good at accounting that Deloitte was called Deloitte Akintola Williams, or Akintola Williams Deloitte, when they first came to Nigeria, because he was just such a gifted accountant. And, you know, I would be so interested to hear his views. I believe he's still alive. I'd be interested to hear his views about the ledger and how the ledger works in Bitcoin. So, Bitcoin. I see people on Instagram, this is the money that I made from Bitcoin, and this is the money that I used to buy my car. I'm trading crypto. I'm into crypto. How to get into crypto. I'm not going to say any of that. I'm just going to tell you about Bitcoin. And Bitcoin was started by Satoshi Nakamoto. Like I said, we don't know whether it's a he, she, or them. But what he was aiming to do was start something that could be classified as money. Basically, to meet three qualifications. It had to be a unit of account, it had to be a store of value, and it had to be a medium of exchange. And, you know, when he first created it, it wasn't used that much, as it couldn't be exchanged for any product. And, you know, stuff was going on in the cyberspace. It was invented in 2009, I believe. And, you know, in the cyberspace, people were saying, okay, it is a unit of account because we're using it. We know that, okay, we have 5,000, we have 10,000, we have 1,000 Bitcoins. And it was a store of value in that people were buying Bitcoin, but it could not be used to do anything. And that was a difficulty because to meet the definition of money, it also has to be used as a medium of exchange. So this guy, Laszlo, posted in May that he has 10,000 Bitcoin, and who was willing to give him 2 pizzas for 10,000 Bitcoin. First day, nobody answered him. Second day, he posted again that, is the money too small? All I want is to give you 10,000 Bitcoin. I want to prove that this thing can be exchanged for something. I want to give anybody 10,000 Bitcoin that can deliver a pizza to my house. And finally, somebody answered him. And this is him and his children celebrating after they'd exchanged 10,000 Bitcoin. At the time, this was 2010, for 2 pizzas. 1 Bitcoin today is $40,000. And he, at this time, when we were 2010, exchanged 10,000 Bitcoins for 2 pizzas. 10,000 Bitcoins. How much is 10,000 Bitcoins worth today? Sorry? About 4 billion naira. I'd have even expected it to be more than that. Because if each one is 40,000, well, today it's around 42. I think 2 weeks ago it was even 60,000. So it hovers like around $50,000. So that means it's several billion naira now. So if you deliver those 2 pizzas to his house at that time and collected his 10,000 Bitcoin, you'll be a billionaire by now. And actually, I told you, so people take Bitcoin like a religion. Because this was the first time that Bitcoin was actually exchanged for money on May 22nd, people don't go to work on May 22nd, though, people that really believe in this Bitcoin. It's a holiday. Time for enjoyment. Try to celebrate the first time that this currency was exchanged for something. And it became money because it was a unit of account, it was a medium of exchange, and it was a store of value. So we've spoken about mining. I'm not going to go into that again, but what I didn't speak about is the public key and the private key. So your public key is the key that allows you to receive any cryptocurrency transaction. And it's paired with your private key. That's what you use to prove that you're the owner of that Bitcoin. So people expose their private keys, public keys, but your private key you have to keep to yourself. Because if you give somebody your private key, then they can steal your Bitcoin. Now, how does this all relate to venture capital? Because this is a venture capital course after all. Nobody knows who Satoshi Nakamoto is. And a lot of these guys that operate in the cryptography space, obviously, you know them, they are cryptography people. Cryptography is to hide. So they don't like people knowing their real names. So you as a venture capitalist now, how do you invest in somebody that will not even turn on their camera on a Zoom meeting, let alone come out of their house to, to your office to meet you? They're called pseudonymous founders, people that, yes, they founded the software, they founded this crypto application, but you cannot know them. So how do you go about investing in them? Remember I spoke about due diligence in the lectures. So you have to be able to, how do you do due diligence on somebody or something, or some entity, or some group of, you don't even know. So this is the issue that as the crypto space is becoming bigger and as opportunities are multiplying, these pseudonymous founders are coming about and venture capital firms are trying to put in place ways that you can invest in them. Stable coins. Stable coins are coins that derive their price from a physical thing. So it can be stable coins that derive their price from the value of the dollar. There can be stable coins that derive their price from the value of gold. There can be, but those are stable coins that derive their price from something. There's an underlying asset there. It's not just electronic. Meme coins are like jokes. And the reason why I put Elon Musk here is because he is the biggest proponent of a meme coin called Dogecoin, which has a picture of a dog on it. And yeah, every time he tweets about Dogecoin, the price goes up and down depending on how, the internet is feeling at the time. And he seems to be able to make a lot of money from just manipulating, would I say manipulating? Yeah, kind of influencing the market, I guess, on some of these meme coins. An altcoin is anything that is not Bitcoin. Because Ethereum is now seen as a serious coin as well, some people call altcoins anything that is not Bitcoin or Ethereum. I've been experimenting with Nigerian food. So we have typical a starchy food that we eat in our state, which is called pounded yam. And it's yam that's pounded, but it's quite heavy. And I want to diet. I'm maintaining my figure. So I've started experimenting with cabbage pounded jam. So just pounding the cabbage up and eating it with the traditional soup. And carrot pounded jam. And beetroot pounded jam, just vegetable pounded jams, basically, with no pounded jam in it. So some people on social media have been saying that I'm eating alt swallows because it's not the original one, it's not Bitcoin, it's another one. So there must be alt swallows, and the real one is pounded jam. And that's what altcoins are seen, the real coin is seen as Bitcoin and anything else is seen as an altcoin. But some people obviously say that Ethereum has kind of established itself also, and anything that is not Bitcoin or not Ethereum is now seen as an altcoin. And there are over 900 altcoin currencies that have been created since Bitcoin. So I've spoken a lot about Bitcoin, and I've told you some people see it as a religion. Some people say that Bitcoin is going to save the world. Some people, people are saying it will create a fairer financial system. Some people say power, Bitcoin is giving power to the people. Some people say that Bitcoin is the one that is going to lift people out of poverty. You see some people talking about Bitcoin conferences, like pastors talk in churches where they're dancing up and down and saying, you better believe in this thing, it's going to save your life. I'm not one of those people. I'm not a Bitcoin maximalist, and I'm not a Bitcoin minimalist. I'm somebody that believes that it could be very exciting, but you'd not see me like preaching out of the gospel of Bitcoin on a Sunday morning. Bitcoin does have some problems. Number one, it's slow. So Visa is able to do hundreds of transactions per second. Most cryptocurrencies can only really do under 30 transactions per second, so it's slow. It's inoperable, meaning most of the financial technology innovations that we've had still plug into the original system, so they can operate with the original system. So we've had waves of financial technology. The latest in Nigeria has been the payment companies like Paystack, which was one of our first investments at the first VC funds that I co-founded with Mr. Augusto and Abbas and Mr. Dave, called Green Tree Investments, and this was, one of the first very large payment companies that was eventually bought by Stripe. And Paystack you could still use your own Zenith or UBA or Fidelity Bank or Stanbic bank accounts to transfer money into Paystack. Right? Those technologies could connect together. Whereas blockchain is a completely different system. There's also the issue of scalability. Can it scale to serve the needs of everybody? Can this technology really, just on the point of interoperability, even between blockchains, between different blockchains, very, very difficult to make them work together. And then in terms of scalability, you need it to really scale to serve the needs of everybody in the world, basically, if this is going to be the new money. And can the technology do that right now? And then cybersecurity. There's nothing that replaces the feeling, for me personally, of being able to go into my bank and change it for the bank manager. Like, you can get angry in the bank, you can go there, but this one, there's no bank. If you're hacked and your money is missing, then there's nobody that you can go and get angry with. There's no customer service that will say, madam, sit down, we'll solve your problem. That is it. The money is lost, it's been hacked. So what do you do about this situation when there's no manager, there's no MD, there's no branch manager, customer service, there's no customer, you cannot call anybody. So if there's cybersecurity issues, those need to be looked at as well. And a lot of people complain about the cybersecurity issues. But I think that people like to be able to go into a branch and ask questions. My money is missing. What are you people going to do about it in UBA? Yes, I want to see the MD. I want to see the GM. I want to see the agent. You can't do that in Bitcoin, or there's nothing like that. If you've lost your money is lost. If you were hacked or you misplaced your private key, that is it. There's no recourse. Even some people keep their Bitcoin in hard storage, so they keep it on a USB. If you lose a USB, the money is lost. There's nothing that can be done about it. There's no centralized person keeping any record of it. So these are some of the things that build a bit of a case against crypto. Stephen Dale is very critical of crypto. And I'll read what he said out word for word because I think it's really interesting. He said the crypto project has had 13 years to try and find a problem to solve, and it has not found one. The real world has fundamental constraints that make the technology unworkable. Whenever it has to interact with the outside world, the benefits of decentralization disappear, and the solutions end up simply recreating slower and worse versions of the processes and structures that already exist. Despite that, for 13 years, these projects have done nothing but scam people by creating synthetic asset bubbles for gambling and destroying the environment. there are fundamental limitations to the scalability of blockchain-based technologies, and every use case is better served by a simpler technology, except for crime, ransomware, extra-legal or illegal gambling, and evading sanctions, all of which are a drain on society, not a benefit. Taken as a whole, the technology has no tangible benefits over simply using trusted parties, your Zenith, your UBA, your central bank, and centralized databases. So I decided to start my close with this quote because I feel like we started on a very enthusiastic note. And even the title of the module is called The Future of Money. And we've discussed around a number of issues, which are all really nicely brought together in this one quote. And the next slide further goes on with the challenges. Because what Bitcoin claims is it's the money of the free. All people that are living in poverty, all people that can't have bank accounts, all people that perhaps have been excluded from the financial system, all people that have been told that they're too poor to open bank accounts can now be part of a new financial system. I sound like one of the Bitcoin maximalists now. All people are free. Oh, well, yes and no. You see, one of the things that people complain about the traditional banking system is the level of inequality. And the fact that this current system just makes the rich get richer and the poor get poorer. And the Bitcoin maximalist will say, you know, we're different. But are they? The top 2% of accounts own 95% of the $800 billion supply of Bitcoin. 0.1% of miners are responsible for half of all the mining output. In fact, Professor Galloway at NYU Stern says if Bitcoin was a country, it would be the most unequal country in the world. Anyway, if you still want to invest in Bitcoin, I will show you how it fits into some traditional portfolio models. Now, if you really want a detailed lecture on portfolio management, value at risk, Markowitz portfolio theory, then go right onto my banking and capital market video, which is also on YouTube. It's about 2 hours and it will take you through all of that stuff in a better way than I can here. But what I will talk about is the capital asset pricing model quickly, which is one of the most famous and respected models in finance, and probably the benchmark theory for expected returns in a portfolio. And simply stated, it says that investors should hold risky securities according to the market-weighted values. And the CAPM would say that you shouldn't hold cryptocurrency because it has, it's not an equity, right? So CAPM says that you shouldn't hold large amounts of currency and cash because they're not good for an efficient portfolio, and hopefully none of you are holding large amounts of cash because, yeah, that's generally true. And because the CAPM will classify crypto as cash because it doesn't have intrinsic value and it doesn't pay dividends, CAPM would probably say that it should not be part of an optimal portfolio. But this is not the only lens to look at it. This is a CAPM lens to look at it. If you look at the Sharpe ratio, for instance, and this was work done by Jessica Watcher, and she's a professor of finance at Wharton University in America who specializes in cryptocurrency and digital currency. And she talks about the Sharpe ratio. Okay, CAPM doesn't work. Let's look at the Sharpe ratio. And the Sharpe ratio measures the performance of an investment, such as a security or a portfolio, compared to the risk-free asset, adjusting for the risk. And the risk-free asset in Nigeria will be silence? Federal government treasury bills, right? That would be like a risk-free asset. So what you're doing is trying to see, okay, what would this give me compared for federal government treasury bills. And for Bitcoin and Ripple, the Sharpe ratios or the risk ratios compared to the risk-free rate are about the same as investing on the S&P 500 in terms of risk. So buying ordinary shares on the American Stock Exchange. Ether is slightly higher risk, but not overwhelmingly so. However, if you go into the theory around calculating Sharpe ratios, you'd find out that probably a lot of the wins in crypto, it would attribute to survivor bias. So you just really got lucky, and trading costs. So this, if you are looking at it from a Sharpe ratio perspective, it would most likely probably argue against investing in cryptocurrency as an asset class. But if you're in search of alpha, an alpha of a portfolio is the excess return it produces compared to the benchmark index, which CAPM doesn't explain, then cryptocurrencies do hold the potential to generate supernormal returns. And if you're looking for alpha and you're using the alpha lens to look at these investments, and you're looking for these super normal returns at high levels of risk, then yes, the alpha lens would suggest that they're a good investment. Wow, this has been quite a journey. We've looked at blockchain and defined some of the terms associated with it. We've spoken about central bank digital currencies and NFTs. We've spoken about cryptocurrencies. We've spoken about decentralized finance. And we've spoken about how you should view these, whether you want to call them assets or currencies, according to your portfolio. Thank you very much for listening.